Welcome back to the Commercial Real Estate Show. I'm Michael Bull. Our topic today is boom, bust, or bubble. We have Mitch Roschelle with us on the phone. He's a U.S. real estate practice leader with PwC. And Mitch, one of the things that we're hearing from a lot of folks today is they're a little worried about the low cost of money that some people may be overpaying for some commercial real estate assets. What do you think the impact will be for values and cap rates of rising interest rates?
So let me sort of debunk the premise that people are overpaying exclusively because rates are low. There is a little bit of a cash flow dividend that you get because you're borrowing money at a lower rate. But I think that the cap rate compression that we're seeing in the marketplace is really more a function of the availability of equity that's out there and the fact that there's this ongoing chase for yield, all of which seems to have been justified in some of the subsectors by cash flow growth. So if we saw cap rate compression and we didn't see cash flow growth, I don't think cap rate compression would be sustainable. But when you have year-over-year growth, let's take the lodging industry for a second. Lodging industry is growing RevPAR at 6.5% when GDP is not even 3%. Okay, the industrial subsector is seeing rent growth in 5% range. So that's justifying cap rate compression. Multifamily that I talked about in the previous segment is seeing rent growth year over year, which again justifies the cap rate compression. So I don't see that there's really a interest rate driven phenomenon exclusively. The question though is what happens if rates go up, and can we sustain that, and is there enough wind in the sails of the strong fundamentals? And I think I hopefully made that case in the previous segment that the fundamentals do look strong enough, at least on paper and in reality.
Okay, and let's get back to something you were talking about earlier. We were talking about what inning we're in, and if we use a 9-inning game, maybe you're saying we're in the middle of the game here. What about with B properties or C properties or even A type class properties that are maybe in some of the smaller and tertiary markets around the country where those cap rates really haven't compressed to what we're seeing in some of the gateway markets?
2016 and beyond may be years of smaller markets getting their due in a good way. If you just sort of go back, and I can't help but plug emerging trends in real estate, we see all the big gateway markets moving out of the survey top 10 and smaller markets moving in. And that's not PwC or ULI talking, that's investors talking. So I think that that's a sustainable trend in terms of investors looking for fundamentals in smaller markets that really look better on paper than the fundamentals in the bigger markets, which may be, as you said earlier, a little long in the tooth from where they are in recovery. So you may be in early innings in Nashville and you may be in late innings in San Francisco, and that's why we're seeing a rotation of capital into those smaller markets.
Yeah, I mean, that's very interesting because, we have listeners all over the country and all over the world, and some of them are investing in institutional quality A properties, but some of them may be investing in smaller properties in small markets where they might still be in a recovery. I know right here in Atlanta, we're in very much an expansion market, but we still have some areas, pockets around Atlanta that are in recovery and some even in distress. So very interesting views there. And Mitch, we appreciate you being on and join us on the phone next time. We want you on Skype next time, right?
And by the way, right now I'm on Periscope also, which is just showing my social media dexterity right there, Michael.
There you go. Perfect. We really want to see your hair as well next time.
My hair is on Periscope right now, if you want it.
All right, Mitch, thanks for joining us.
Thanks, Michael.
And thank you for joining us out there on one of the 47 radio stations. Maybe you're listening on iTunes, maybe you're on Podomatic or the commercialrealestateshow.com. We appreciate you being with us. And if you want to check us out on Twitter, I'm at @BullRealty or @CRE_show. All right, next week we're going to have a contract and a lease negotiation live with attorneys. Don't miss it. See you then. I'm Michael Bull. This is the Commercial Real Estate Show. The Commercial Real Estate Show is brought to you by Bull Realty, a great place to do business. Xceligent, information for the professionals. And Commercial Search, properties for sale and lease. To access these companies or for additional videos, podcasts, and articles, visit CREshow.com.